Here, amazing trader. Welcome back to the channel. This is Trade with JoedaveFX Trendline Strategy. Use Today, we want to talk about the smart money trendline strategy. It's actually one of the best strategy ones learned out there. Actually, this strategy is very, very simple and very easy to use. These are the checklists to use this strategy accurately, right? And what is this strategy? So, what is it all about? It's actually a trendline strategy where it's called the five touch on the trendline strategy. It's actually five touch on the trendline strategy where price comes to touch the trend line 5 times, and the fifth time it's actually when the price break out of the other strategy. Now this is how I now trade it personally. Now I'm going to be using this in a bullish market. I've actually tested this. We use this very well in the buying markets. I've not really used it in the bearish market like that, but it's very, very effective on the bullish market. So this is what I mean. But the first and the second touch of the trend line must be connected very well. So let's say we have the trend line playing out like this. So we have this price is actually in a downtrend, so like a retracement going down. So at this point here, now this first touch here, and this is the second one here. So this first touch and the second one, you want to take your trend line choose and connect it very, very well like this. So once you connect this first one and the second one, then leave it. So no matter what price is doing for the other one, so far it's still trading below it, then it's still very, very accurate. The price might also continue like this. Then what? Go down like this again, and then this is where we are interested in getting it. So if you have to count these waves here, so let's just use this part here. Check this part here. We see that this was the first touch here. We have the first touch here, second one here. So if I have to highlight it every point out, so we have the first one here. Our second touch was here. We had the touch one here, and the fourth one is this one here. So, all right. So now this fifth one here that's here is where we are interested in getting in this rate. So we want to wait for it to break outside of it like this. But why price is breaking outside of it, price might leave a zone where we might be interested in getting it, which we are still going to get in why I explain these details further. So price might leave a zone around here, sometimes might leave it around here. Actually, so it's going to be like a break and a retest of it. So which will take us to the second point, like there must be four valid touch on the trend line. So which is 1, 2, 3, 4. We already talked about 1, 2, 3, 4. I already explained here. Then so the third point is the fourth touch must be checked to a valid POI. So before this strategy wants to be very active, let's say maybe price was somewhere here at this back here. Let's say maybe there was a zone here somewhere here like this. All right, so let's say this zone here, or let's say we have a zone here. So this particular zone, let's say this was where price was this spot touch rejected to this zone here. So this spot touch, this was where it rejected to, which was the POI. So this POI become a what, a valid POI for the buy continuation to continue. All right, so we actually know that this type of trend line is a retracement phase. So price pull into this zone, but let's say when price gets into this zone, we are not really sure of what price wants to do next. Then what we want to wait for is what we want to wait for this trend line to be broken since we had a five touch already. Then since we had a value POI, this is our first signal that yes, the bull is about the bull market are stepping in, the buyers are stepping in, the bullish market is about to continue, right? So this is our first signal. But we want to wait for more confirmation, which is a break of this trend line and kind of a witness of it. Then we find a very valid order block or breakout block or an FVG around this area, which we can actually wait for price to pull back into it. Then we can take our buy maybe right from this point here. Let's say we just take the buy from somewhere here, and we can put our stop loss below this same zone here. Then we can target all the way to the first touch of this trend line. So actually our final target is always going to be to where this actually trend line started, which is the first touch here. So that's where we are going to be targeting. And which leads us to the second one is, so which I've already talked about the first one, which is wait for price to return to the trend line and break and retest, which is this fifth touch. Wait for it to return here, break it and retest it. So talk about it, then take an entry from a OB breaker block of FVG. So which is what I already explained here. So I've already explained all these five key points here. So we are going to go inside the live chart now and actually going to be checking each one of these one to we're going to use it to get in a trade. All right, so now let's have a live example. So excuse me, let me just delete all this. All right, so now I'm going to be using GBP as an example here, as a showcase here. So let me just keep this one this side. So let me just put this here. So we have our checkpoint there. So you can be checking it while we are about to trade this particular strategy. So you can see we add this kind of a pullback here. So let's check if we're going to have this 5 touch strategy here. All right, so good. Now this is the trend line. You can see I've connected. This was the first one I saw. That's obvious, and this is the second one. So I connected this first one and this second one together. Then I drag it down, which is our first checklist on this one. Connect the first and second touch of the trend line very well. So which I already did that. So now we have our first this checked. All right. So now the second one is what there must be a 4 valid touch on this trend line. So now let's count if we have a 4 valid touch on this trend line. We have I'm going to highlight this. We have the first one here. I have the second one here. The second one. We have the third one here. So you can see they're very close. And we have the fourth one here. So if you have to look at this middle, you say, why didn't I use this one here? If you look at this, you see that it didn't touch the trend line, so you can see it. So which is we have to say a very 4 valid touch on the trend line. So we have to let this price touch it. If you have, let's say you have something like this, they touch it, you don't count this as a touch on the trend line. So you can see the ones that touch it very well. This one was a very nice touch. We have this one very nice touch, a very nice touch, and we had a very nice touch here. So which give us 1, 2, 3, 4. So we added 4 valid touch on this trend line here. So next one on our checklist is what number 3, which is there must the fourth touch must be rejected from a valid POI. So which means this fourth touch after the price touches this one here at the selling here. So this point here where it's rejected start coming up must be a valid POI. So let's see if you had a very valid POI there. So I know which I can see we had something here. Yeah, we had something here. So good. So you can see that was a very valid POI there. So very good one. So you can see we have a supply is it demand area there. So where buyer previously took off. So before price now returning back there, and we have something like an inducement here. So you can see price take off this inducement and tap into that area. So which this is very valid. So now we have our third point checked. So we have a valid the fourth rejection on this trend line actually rejected to a valid PO high. So we had number 4 was being marked checkpoint. And now we have that's number 3 checkpoint. So now let's go to number 4. Wait for price to return to the trend line and break through. So now, which is actually the fifth touch we're talking about on the trend line. So you can see it if I'm zoom out here. So you can see this was the fifth touch. What happened there? Price what? Break outside. You can see we have series of candle breaking outside of it. So if you want to confirm a breakout of the trend line is until you see a very strong engulfing candle closing above it. You can see, for example, here we have one closing, we have a rejection candle, but we're still above it. Then we had a very massive engulfing here, so which is confirmed a breakout. This is not a fake out. So you have to be very careful of fake out and a breakout. All right. So now where do we now want to get in? Why price was going? So we're going to study all these moves that is happening here, what exactly was happening here. So we could see that we had price push here, tap back into this zone, went, tap back into this zone, went. What there was an FVG here, this one tap back into it, went. But right here you can see that here there was an FVG and this price tapped back into it, but it did not fill the whole FVG. You can see the fair value gap started from somewhere here all the way to this point, but this guy filled it up, and we also add another block sitting right about here. All right, so we add this other block sitting right about there. So which this, excuse me, so which this other block is where we're going to be interested in this trade. So like I was explaining on the rough charts, I said let's say where price gets here, this was where we're supposed to divide, but I'm not too sure about if price is going to buy from here because price might actually get to this trend line what and reject that back. So we want to wait for a breakout of this trend line and a retest, and which exactly what we had. We had a very clean breakout and we had a retest. So this is where you want to take the buy. Here we have our first buy here, and we're going to put our stop loss just below that other block that give us the entry. So with 50 below it, something like this. Then we're going to be targeting to this first touch of the trend line. That's actually our final target. All right. So our final target, which is this where we're going to be targeting, yes. So we can see we have a reach word of 1 to 14.5 on that one. And actually, why the strategy is playing, something very interesting about the strategy is all this touch on this trend line is actually liquidity. So if you understand a touch on the trend line, so they are just liquidity. And what when price is going is actually going to be taking off liquidity, retesting that same area, going and same retesting it. So until we get to the final target. All right, until we get to that final target. So I'm just going to keep this one here. So now let's see. Now this was the first. I'm just going to highlight all this touch here out. So I'm going to highlight everything out. We had another one here. Excuse me. We had another one here. We had another one here. And the last one, very point here. So good. So now you can see that when price was going, price is going to be giving you more entry. This is actually a swing trade where you can just a swing trading and be having more position, and price is going to be playing in your favor. Why? So you can see immediate price was going. What happened here? Price was took at this high, which this was a clear break of structure here. Actually, this was not a clear break of structure; it was a sweep. So price swept it, and when price swept it, we have if you check this point here and to this area, we have something like an heavy G here. So actually, this candle here to this one, this actually another block. All right. So and above it, we have an heavy G there. So you can see price went here. So if actually add the another position, if you wanted to add enter another position at this point for our second entry, all right, so excuse me. So I just want to centralize. So if you wanted to add another position here for our second entry, what happened? Price didn't get to the entry and what zoom off. And after it zoom off, what happened? It took off this high again. So we are not able to add a position around that point. But here again, here we had a very clear break above. All right. And what happened here, you see that we had this candle being dropped here, a sell to buy candle. So that's little other block that was dropped there. So which was above this last touch we have here before the fifth one. So you can see that every touch, once price gets to every touch like this, let me plate it very well. Once price gets to every touch like this, it's going to what? It's going to break it and retest that same area, react from it because that's our liquidity area. So you can see when it break above it, it came first time tested it. So even if we had our entry here, which is the second position we're going to be adding, and we're going to put the stop loss just below this place a little bit like this. Even we can even make it more smaller. So and all entry we taking still leads to the final on to the final target. All right, so that's final target. So the first one we have a risk reward of 1 to 14, and the second one is giving us a risk reward of 1 to 54. Why do we have that kind of a risk reward? Because the stop loss was very minimal. All right, the stop loss was very small, so you can see it. And what price went, and they came back to that same area again, tested it second time. So if you are kind of a very aggressive trader, you can also use this opportunity to add another position. But adding one position for me here is okay. So I'm just going to leave it until we add another break of structure around there. And we also add another one here. So you can see when price pull back here, we had a new break of structure here again. And what's happened again? So let me just label this break of structure. So excuse me. Just going to label this break of structure. All right, so good. So we had a break of structure here, and when price took up that structure, you can see this was the third one on the touch of the trend line, so which I marked out. And what exactly you see happen? Price after when price breaks this above this one, it's also break above this second one here too because they were very close to each other. So price break above it, never retested that area. But what happened? Price left this other block at this midpoint here. After the break, price left this other block here. Yeah, so that was the other block. And which is also in line with that second touch, which in line with the third touch of that zone, all right, on that trend line after the break. And what happened? Price went all to this high and what we trace all the way back here, which you just want to what use this as another opportunity to add more position for long. Immediately price taps into it, add again. The stop loss just below that zone. Now, the more you add a position, this is what you should be doing. The first position that we entered here was this. Why price was going here, give us another entry here. The stop loss for this trade should be here. And part of the profit you make on this one is what you use to enter this trade here. And why it goes again, come back here again, the stop loss of this guy should be moved back here to this bottom, this same place you put your stop loss, and the profit you make right from this point to this retracement should now be another, should be part of the profit that you are also using to take another entry here, which means you are still making a lot of profit here, a lot of profit here, and you still add this one. Even if price has to trace up or this one come down, you still going to come out big with a very big win. And what same target price on all target leads to the final touch of the trend line, which was the first touch. So our target lead there, so you can see it and low. What happened? This one actually took us to our target. This, so there was no entry, there was no more any entry. Immediately price tapping here just leads to the target straight away, and that was how we had our full TP there. So if you are to calculate everything you make on this kind of trade, very strict trade, and you had three positions. So after the three position, you have about risk reward of 1 to 54.9. So actually, it's actually 1 to 55. So this word of 155, and we had 1 to 14 here. So that's about 69. All right, so this 55, 14, that's about 69, which reward already just with two positions. And the third position actually give us a risk reward of 1 to 20.8. So I'm just going to say a risk reward of 1 to, actually, we have some dotted points here. So if I also add dotted points to this one, that might be a risk reward of 1 to 21 actually, yes. So 21 plus 69, that's about 90 risk reward. All right, yes, that's exactly 90 risk reward. So just on two positions, three positions you took, you make 90% of your accounts. That's almost 100% of your account. So just imagine you were trading with a prop account. With this kind of strategy, you were trading with a prop account. You'd have made a lot of money for yourself, and making 90% of that account is going to be a massive, very massive payout. And if you have to take this trade should never take more than, let's see, let's count the numbers of this trade actually used to play out. So where's my day range calculator? So okay, so this is the day range calculator. So let's just see numbers of this price used to play out. So this was where we started our entry from all the way to this point here. And I'm going to drag it forward to we have our full TP. So this was the exact area we had the full TP, this exact area here. So this is, you're just going to check the numbers of this here. Excuse me, I'm just going to check the numbers of this. So the numbers of this is 94 days. So there is about 3 months. All right. So this is about 3 months. This about, yes, 3 months. So this is 94 days, 3 months and 4 days, right? So this is about 3 months. And yes, we had about 3 months, and this is about 1,152 pips. So that's a lot of massive pips. All right, that's a lot of massive pips. And you can just be on this trade and be very, very relaxed and focus on doing that. So for 3 months, you actually cash out very big. So this is it. You can actually use it on lower time frame as well. It works perfectly. So I'm just using 1 hour time frame as a showcase here. All right. So let's check more example for this strategy. So let's check more example. So presently on the present market that is happening here, with this present market that is happening here, if I have to go to the lower time frame, that is the exact same thing that is happening. So I'm just going to delete. I'm just, so excuse me. So let me just clear off all these ones. So thank you. So yeah. So I'm just going to keep this one here again because that's what we are going to be using to guide ourselves while we take each trade. So this is our checklist. So this must be confirmed. All right. So checking here, let's see if it happened here. So I just want to bring this thing very close. So I don't want price to zoom it out. So checking here, let me put it here. So let's see. I think okay, it doesn't happen here. This was just like a three touch on the trend line. This was the normal trend line strategy. Actually, this strategy is also on my channel for a very long time. I've done it there. This first, second. So we expected the third touch to be the craziest one, which you actually know, but that didn't happen. Instead, price broke above it and we tested it. And also when you tested it, push into a very valid zone, then buy from there. But we're not talking about this one now. So we're talking about the 5 trend line strategy here. So let me just go to the 1 hour time frame. Or let me see. Okay, let's go to the 2 hours time frame. I just want to bring this guy here. So these are checklists. So I just want to keep it very intact, very, very intact. So let's check what is happening here. This is present price. This is now present price, right? So let's check if you're actually going to have a 5 trend line strategy in this present price. So first, using this strategy, you want to connect the first touch and second one together. So if you look at this and this now actually a trend line, so it's going to be this and this. So I'm going to connect this one to this, and then I drag it all the way down. All the way down. I'm going to make sure it express. So you see the first touch to the second one, and I drag it down. So you can see the third one touch here respectively, third, fourth, very fine, and we had the fifth here, so very fine. And the fifth is always one that break outside of it. So now let's check, and you can see I have I actually talked about this kind of other blog on my YouTube channel. You can watch it. So this kind of other blog, yes, you can see this kind of other blogs I talk about on my YouTube channel, and as well we have this left get candle here. So we are just going to be using as a pure high, all right? Because price left it there for a reason. So we're just going to be using that as a pure high, close the whole of that area. All right, so this is my value zone here. So I'm just going to put it like this. So which take us to point three, a very valid the fourth touch must be getting from a very, very valid zone. So we had a very valid zone here. So then let's start from number one. So for the first one, this is our first touch here. And second one we had it here. And the third one we have it here. The fourth, yeah, and we have the fifth here. Good. So now let's zoom out. So let me just go lower in time frame like 30 minutes so we can see this touch very well. So yes, so you can see the touch are very, very open here and very close here. So that's it. I said this strategy works no matter the time frame you're using, it works very, very well. So now this me using 1 hour and 30 minutes as a showcase here. So we had the first touch here, second one here, third, fourth, then the fifth. So which is we have done the first checkpoint, connecting the first one and second one together. Fine. The second one is there must be four valid touch on the trend line, which we are the first here already, very valid. So that is done. Then the third point here is the fourth touch must reject from a valid PO high. So if you actually want to take a buy, you should have considered taking a buy from here. And you can see like this, you can see this was the consolidation market. So there's still liquidity gathering at this bottom here. So look at this. There's what? Liquidity gathering. What's happening? There's liquidity gathering at this bottom here. So I know when you see liquidity means money. So we have liquidity gathering at that bottom. So which price what finally ejected, clear off all this liquidity that is here and tapped into this zone. Case even touched the very tip of it and rejected right away from there, which it was the rejection. It was actually the fourth touch that pushed market all the way down here and ejected from here, came here, didn't break above it, actually did a five touch and what ejected a little bit. But this was a very valid trade because it didn't reject and take out the low of the fourth touch, so which is still very valid. So far, this low is not taken out yet. It's still very valid, and what price end up closing with a very massive engulfing closing above that zone. So you can see this was a very massive engulfing closing above that zone, which is very, very, very fine. All right. So now, where do we want to get in this trade? Why price broke above it? It left us with this last other block that was here. So I'm actually going to go to 1 hour so I can mark that other block very well. So you can see the other block was very long on 1 hour. So that's why you have to be very flexible when it comes to time frame. You have to be able to switch within time frame. So if I actually want to use the 30-minute time frame here now, for example, this was the kind of other block it left, but this was not really another block for me. And you can see price will have left us, didn't tap us in. That's why I have to come back to the 1 hour here and see exactly what happened. I can see very clear the other block was there. So which is going to be our entry here. So this is actually a live chart now. This is the live chart. So this is the live chart. You can just go on this. You can see we are still close to entry. We are around the entry position. So you can just check this out. Immediately this video comes live on YouTube. So just check this video out and you can actually take this entry. You can catch it. Yes, you can catch it because this trade is actually still going to take maybe numbers of 2 to 3 days before it's ETP. So and this is my TP final TP here, which is this first touch of the trend line, and here we add a risk reward of 1 to 5. So this wasn't a very massive risk reward ratio because our stop loss is kind of very big here. We have about 31 pips for this stop loss, and we are going for 161 pips. So that's a risk reward of 1 to 5.12 on this trade. but it is a very, very valid trade. So you can see we had a nice break and the retest of it, tapping us back into this other block. Then we can take from there. So if I actually check 15 minutes time frame, let me see if there was still a very valid other block of course. Let me see what exactly what. So you can see even on the 15 minutes time frame, there was no valid other block there. So that was just a very nice. But we should have used this as this sell to buy candle that price left here. So because once you see this kind of candles, they mean a lot. Yes, they mean a lot. They mean a lot. When price left a red candle in the middle of green candles, it actually signify a lot. So this will have been our entry. Then maybe we can reduce our stops to this low here, this particular low here. So can just use that to reduce our stop. It was still the same entry though, but we can use it to reduce our stop. All right, so let's go back to the one at time frame. And now we add a better risk reward, which now we are having a risk reward of 1 to 6.89. So now our risk reward have increased. So now, like I said earlier, I'm going to mark out all the points where price touch it. I have a touch on the trend line. We had the first one there. We had another one here. We had another one here. Then we had another one here, then the first one. Yeah. So these are all the touches. So you can see now, presently, why price is struggling here. Actually, this is a dead hour trading because by the time I'm recording this video, this 144 UTC plus. UTC plus one. So this actually midnight Nigerian time. So by the time I recording this video, that's why you can see price is actually struggling breaking above this area. It was like a London section or a very yes, let's say London section very active. Price would have broken this without thinking of it twice. We tested it, then move up. So I might be having my second position entry. That second entry on this trade. Immediately we had a very nice once market open. What I'm expecting once London section open, what I'm expecting is a very nice push above here, and then maybe kind of a retest here. Then we continue again. So I'll keep adding position. Then we get here again. We test it. Get here again. We test it. So I might have about 2, 3 positions open on this trade till we hit our final target, which is this. So this actually gives word of 1 to 7, very sharp. So you can see 7.02. So very sharp, very sharp, very sharp. So we are all check box. We have everything ticked. So this actually a trade. I'm actually presently on this trade. Yes, I entered this trade before market close. So if you actually look at the entry signal here, this around if you have to check the time. So this was 7 o'clock in the evening. So before market close, I got in on this trade. So this was my confirmation entry. And what I'm just waiting for is price bleed all the way to this high here. I have reached what about 7 trade on that. But notwithstanding, so no matter what happens, I'm going to come back and update you guys. Probably maybe by weekend if this trade has played out very nice. I'll come back and update you guys. So now let's use another pair for example. Let's use Euro USD. Actually, this strategy works very well on pairs that pairs with USD, maybe being base pair or being quoted pair. So far, it has USD in its pair. It's working very okay, very fine with it. So the second one, let's just check Euro USD here. So you can see I already add it on Euro USD here. So I had the first touch here, second one here, third one here. So let's just put our checklist point here. So these are checklists here. So, excuse me. So these are checklists here, all right? So the first touch and the second one being connected very well. So this first one and this second one. Now, I didn't use this as second one, so you can see it because I need to see the obvious one that are outside, not the one that are inside. Because I need, if the way I draw my trend line, I've actually talked about how I draw my trend line on this channel. So you can just watch the video. You actually see video on how I draw trend line very accurately. If I'm doing my trend line, I draw them on the wicks of the candle, not on the body. So if I want to draw a zone, that's when I use the body. But drawing trend line, I use the wicks. So if you check all the example I've shown you, you see that my trend line have been drawn on the wicks. So you can see this one is on the wicks, this is the wick. So once I connect these wicks and this one together, I drag it down. Then one of them might come do like a fake out, come down. That doesn't matter. The one I really needed is the first touch and the second one, which is exactly what is highlighted here. The first and the second touch must of the trend line must be connected very well. So which this one and this one. So once you connect them very well, leave it. Price will always come back there, respect it for the third one, respect it for the fourth one, and that's exactly how price will be doing. All right. So now let's get back into this video. So on Eagle USD, we had the first touch here, we had the second one here, we had the third and the fourth. So the fourth touch is completed now. So going to point number, I think there must be four valid touch on the trend line. So point number two highlighted. So which we are very correct about that. And point number three says the fourth touch must reject from a very valid PO high. So checking the fourth touch, just exactly what we have on GBP So that's this kind of candle that we have here. So if you have to mark it out, so excuse me, just the bottom. So you can even see, so you see this one, it's almost break below it, almost break below it, but it's rejecting from a very valid point. So what I'm waiting for now is I'm waiting for, I know once now the session open, this is why even GPUS is kind of consolidating, because you actually understand Eagle USD push the price, because Eagle USD is the flip of TXY. So TXY measure, or the what I'm waiting for on this one is what I'm waiting for price. Once London section open, I'm waiting for price to push above here. Maybe by the time it's pushing here, it might leave a very valid PO high anywhere somewhere around here. No matter where it drop is. So where it drop is what me I want to be focusing on. So then what I'm going to be taking it all the way high. And sometimes which, because if you check what I wrote here on the 5 points, number 5 was what, take entry from an OB, breaker block, or AVG. So if you look at the first example I showed, second, and even the third one, we all took the entry from an order block. So order block is actually one of the very effective ones. But what if price didn't come to that block? Where else can you take the entry? Then we have something like a breaker block. So looking at this point here, looking at this actually another block here. So if you have to check it, this another block for sell continuation, right? So this particular candle here. But once price is not expected for sell continuation and break above it. Now let me explain what I'm trying to say here. Let me delete this. Let's say this price was coming here now. This price as it's trading like this, is trading here, coming here, and it broke outside of this trend line. And when it broke outside of it, this breaker block here, what now cause this market, this other block that I see here is still another block, right? Now cause market to reject a little bit. Maybe there was a very valid PO point here, or let's say price didn't even let any valid PO high there. Then it did something like this, or let's say immediately it was coming, you just break above it direct without retracing. You just went something like this and later push back here. And you see an engulfing moving away from this point here, engulfing candle now closing like this. After the close, then we now have continuation like this. What this tells you that was this other block is now a breaker block. And this is where what price tested uses it as confirmation entry. So we can still use this as our entry, because looking at the checklist, we say either other block, breaker block, or FVG. So we can have this as our entry position. This particular one may have an entry here, boom, and the stop loss just have to go below that other block that gave us the entry, something like this. Then we can still add our target all the way. So if I have to put this one aside here, we can have our target all the way here. Yep, good. So let me just mark that area house, just highlight it out. So you still can push it up a little bit. So good. Yeah, that's the area. So we can push it up a little bit. And don't forget all these targets area. These are our targets. These levels are for managing trades, probably for adding more positions to as well. But you use them to manage your trades. So it's very, very important. For this kind of one, we may have a use of one tonight. So you see it. So, but I'm not saying that's what is going to happen. So, but if that is what markets presented to us when in London section, then that's what we're going to be using as entry. But if price didn't do that and just what played out, and I mean rejected and tested somewhere here, then we may have a very sweet entry. Maybe price give us entry around somewhere here, and our stop loss was just something like this, and we had our target all the way up here. So we may have a risk world of 1 to 9.61 as well. So you can see this one was a this sort of 9 to 4.3. This one's also a nice this sort of 1 to 9.61. So they are both this sort of 1 to 6, 1 to 9, 1 to 9. Reason being that this stop loss is kind of bigger than this one. So I'm not saying this is what's happening, but whatever happens is what we're going to be using as a confirmation and enter the trade. All right. So till then we have to be very patient and see what price is presented to us. That's why I'm not on this trade on Eagle USD yet. Though GBP USD, I'm on the trade already. But for Eagle USD, I'm still patient because I didn't have confirmation yet. If I actually want to get in the trade, I will have get in with this little order block I thought, yeah. This was you look at this. This was a very sweet entry. I think this was a 15 minutes time frame because I was monitoring this pair, so you can see it. I was monitoring it because Eagle USD has given the entry. So as at the time, I was just monitoring this. At the time, this pair was somewhere here. While Eagle USD was, GBP USD was retracing for retracing that break of the trend line. That was when this one was retracing back here, and we had something like this. I knew this was an inducement here, and we also have something like a double bottom here, which is liquidity. I know price is literally going to come back and clear this guy and tap into this zone here. And if you understand this strategy, actually, I'm preparing a video talking about this candlestick pattern. So, so So that's all about the five train line strategy. All right. So if you find this video helpful, you want to smash the subscribe button, drop a like, and don't forget to click on that notification bell so you don't stay audited when I drop some content like this. And I'll catch you in the next video. Peace out.